Today I'm going to show you a simple market condition test that works. Hi everybody, my name is Cody Koch. Welcome to the channel where we talk about advanced trading, investing, and business concepts. So what is a market condition test? It's essentially a tool used by investors or traders to evaluate the market environment so that they can make the best decision on what type of systems are most likely to work in that particular market environment. Now, there are all types of market condition tests for all types of assets. You can have a market condition test for real estate markets. You can have a market condition test for currency markets, stock markets, merger acquisition, private equity markets, all kinds of stuff. The market condition test I'm going to show you today works particularly well for the United States stock market. It's actually designed for the United States stock market. You can tweak it a bit and use it for other stock markets around the world. I've actually found this to be pretty effective over time. I've known it for many, many years. It's actually been very helpful in many occasions, and I will explain how to find this information. Usually it'll only take a few minutes to figure all of this out, and from that point you can figure out what method or strategies or systems you should bring to the marketplace to maximize your performance and your chances of success. Market conditions can change rather quickly and abruptly. They can change in short order, so you may have to stay on top of this a little bit. So here's how you do this market condition test. You simply answer 3 questions. Question number 1, is the S&P 500 below its 225-day simple moving average? Okay, so to answer question number 1, I'm using TradingView. You can use virtually any other charting platform you want as long as it's able to show a 225-day simple moving average. In this case, as you can see, it's here. The S&P 500, I do have this set to daily charts, that's important. You will see that, in fact, the S&P 500 as of today, which is in mid-August of 2022, you see that the S&P 500 is in fact below its 225-day moving average, which means the answer to question number 1, in our case, is yes. Now for question number 2, has the Federal Reserve raised interest rates in the last 6 months? Now to check that out, we're going to see the federal funds effective rate. Now, basically the federal funds rate is what we're looking for, and you can see here, I've got it set to 1 year. You can go to 5 years, 10 years, max. You can see it all over the place here. What you're going to see is, you can Google this. You'll see this kind of data all over the place, Fred, or economic data, St. Louis Fed, so forth. You'll find this everywhere. But basically, you can easily see that, again, this is August. You can see that virtually every month in the last several months, they've been raising interest rates. So absolutely, they've been raising interest rates in the last 6 months. So the answer to our second question in this case is also a yes. Now the third question, is the price to earnings ratio of the S&P 500 above 17? Now to find that out, you can do, again, an internet search, but I'm going to show you here. There's several locations you can find this information. Just simply type in what's the current S&P 500's PE ratio, price to earnings ratio. Earnings are essentially the same thing as profits in this case. And so what you'll find is that how much more is the S&P 500 selling versus those earnings? Well, as you can tell, on August 8th of 2022, which is what it's estimated to be, the S&P 500 selling almost 21 times higher than the earnings it has at that time. And again, the answer to our question was, is the S&P 500 selling above 17 times its earnings, price to earnings ratio? And in this case, as you can tell, the answer is also a yes. So in our case, the answer to all 3 of our questions is yes. Okay, so what does all this mean? If the answer to 2 or 3 of our 3 questions is yes, again, if the answer is yes to 2 or 3 of our questions, then the market is in a red mode condition. While the market's in red mode, it goes down on average about 9.7% per year it's in that mode. So that means in 12 months that it's in this market condition of red, on average you can expect it to go down by about 9.7%. If the answer to just one of our questions is yes, then the market is in yellow mode. And while the market is in yellow mode, any 12-month period it's in yellow mode, you can expect the market to go up on average about 10.7% during that period. Now, if the answer to none of our questions is yes, then the market is in green mode, which means in that market condition, for every 12 months it's in green mode, you can expect the market to go up about 19.5% in that situation. Now, I want to say this market condition test is based on over 100 years worth of data. It's pretty useful, but I do want to point out that it's not always perfect. It can change, it may not always be exactly right, but generally speaking, this is what you can expect in each one of these market conditions. Now, here's how you use this. Depending on what market condition you're in, will decide what type of system you should be using. For example, right now we're in red mode. In red mode, short selling systems perform much better than they do in any other market condition. In fact, there are short-term and long-term short selling systems. Generally speaking, longer-term holding short selling systems, so short selling in which you short and then hold on for many months, generally does not work in any other market condition except for red mode. In red mode, it usually performs pretty decently. Yellow mode and green mode, those type of systems will usually lose money. On the other hand, during green mode is a great time to utilize a lot of value investing strategies. A lot of the time in that case, you can find some really good deals in the market. You can find some undervalued companies. You can find some really nice deals in which you may be able to take advantage of some serious mispricing in the market and buy some really nicely undervalued assets. Generally speaking, the market is in yellow mode, and you will find some systems work well in yellow mode. Other systems don't work as well in yellow mode, but yellow mode is generally what the market it's going to be in most of the time. There's all kinds of other ways to utilize this market condition test, and I won't go into a whole lot more detail about all these little nuances to it, but generally speaking, that just kind of gives you an idea how this works. It can kind of guide a lot of people in what kind of directions they want to go with things. I found it to be pretty helpful. It's pretty useful to me, and I've been able to make money with it over time in the past. Again, it may not necessarily make any money in the future. This stuff can kind of change quickly. The world changes a little bit. You never really know what's going to happen. All right, everybody, that's what I've got today. If this video was helpful, please like and subscribe, and if you have any questions, please leave it in comments. I appreciate everybody watching. Thank you.